Time now for an in-depth look at the market news on this Monday, and for that I'm joined on the line by Dr. Jun-sok, professor of economics at the Catholic University of Korea. Professor Young, good to have you back on. Thanks for making time today.
Happy to be here.
Well, last Friday, stocks on Wall Street rose to new all-time highs, all three main indices. The S&P up by 1%, the Dow crossing over 35,000 points. Tell us where we are right now in the U.S. market.
Okay, well, the U.S. market, as you said, it hit historical highs on Friday. But the interesting thing is that on Monday of that week, Monday of last week, the 19th, it had the worst day since October 2020 for Dow and worst day in 2 months for S&P and NASDAQ. On Monday alone, Dow fell 2.6%, S&P fell by 2%, and NASDAQ fell by 0.9%. The widely reported reason for that fall by press and analysts was the accelerating spread of COVID, especially the Delta variants. And then after that big fall, it just came back right back up on Tuesday and continued to go up. So on Friday, Dow hit 35,000 during intraday trading for the first time on Wednesday and closed above 35,000 for the first time on Friday. Dow had risen more than 1,000 points since mid-April. NASDAQ and S&P also continued to rise since Tuesday, and it hit new highs as well on Friday. But a bit of a calming news, the futures are set to downwards for trading that starts today. Now, Europe followed the New York lead. It had a large fall on Monday, but mostly made it back during the week. DAX, CAC, and FTSE all made up the Monday loss, though FTSE on Friday, it was just barely above where it was on last Friday. Asia, Nikkei had a moderate loss on Monday and Tuesday, but it's been recovering since, even though it did not recover to the 2 weeks ago levels. Shanghai did not fall on Monday and Tuesday. It went up for the rest of the week, but it fell from Friday onwards. And Hang Seng, it fell early last week. It had a one-day rise on Thursday, then it fell today, and all three Japanese and Chinese indices are falling today.
Well, something everybody's been kind of wondering about, Professor, the coronavirus still spreading fast around the world because of the Delta variant, but still we've been seeing stocks go up and all kinds of assets go up. Help us understand what's driving that seemingly incongruous rise and what you're watching in the week ahead.
Okay, well, let's talk about what the analysts are saying first. Analysts are saying that the stocks are going up because the second quarter earnings reports have been very strong so far, especially from large tech companies. The fear of inflation has declined, and European Central Bank last week pledged that it will retain low rates for the foreseeable future. And then the accelerating rise in coronavirus, the Delta variant. Whenever the market goes down, the analysts mention the coronavirus, but even though the markets fell greatly and then returned to even higher levels last week, the coronavirus spread in the United States is actually accelerating. So it doesn't seem like it's a great explanation for what's going on. Now, note that compared to pre-coronavirus stock market highs in February and March of last year, 2020, Dow has gone up by 19%, S&P has gone up by 30%, NASDAQ has gone up by 51%. Now, theoretically, if you look at economics textbooks, the stocks represent what the market feels are the future profitability of the companies listed in those indices. And I think if you ask every analyst, they do not really believe that the profitability of the companies listed in these indices went up by that much because of the coronavirus. If anything, except for perhaps some tech companies, the coronavirus probably made these companies lose some profitability in the long term. So the rise in stock prices, explaining from the fundamentals, is fairly difficult. So what I think is happening is that the markets are right now in a sort of a manic depressive stage because the central banks have loosened so much liquidity in the market, and the people cannot use that liquidity to buy goods and services. They're using it to buy assets such as stocks, bonds, bitcoins, and so on. But they know that this period of high liquidity is coming to an end. The central bank, if not, even if they did not say it explicitly, I think they are now looking at the end of the game for high liquidity. So when the central banks start reducing liquidity, these investors know that the stock market prices may go down very rapidly. So they're playing, in a sense, a game of chicken. They want to put their money in the stock market as long as the high liquidity remains. But as soon as the high liquidity goes away, or just before, they want to cash out as quickly as possible. So you're looking at very nervous markets, record highs, the record falls, and you're probably going to see more of that until the central banks actually start reducing liquidity.
And here in Korea today, stocks started off stronger, coming off of last week's Wall Street gains, but the KOSPI turning negative early on and the KOSDAQ following suit around midday. Tell us about the domestic market.
Well, KOSPI and KOSDAQ had up and down week last week as well. They both went down on the 15th, down from the 15th, hit bottom on last Wednesday at 21st, and then it started rising on Thursday, but it's down today. So KOSPI fell 0.91% today and ended at 3,224.95. Individual spot, institution sold. KOSDAQ, it fell 0.75% today. It ended at 1,047.63. Again, individual spot, institution sold. And I should mention that compared to the pre-coronavirus stock market highs of last February, March of 2020, KOSPI is up 42%. KOSDAQ is up 51%. So KOSDAQ's highs, the gains are similar to NASDAQ, but KOSPI is much higher than Dow or S&P. So if there's going to be any correction that's going to take place when the central banks start reducing liquidity, it's going to be worse for Korea, not better.
Well, it'll be interesting to follow that together with you, Professor, if and when it happens. And this week we'll be getting preliminary numbers on Korea's GDP growth in the second quarter, also demographic data from Statistics Korea for May, and the big Fed meeting on Tuesday and Wednesday. What's on your radar in the week ahead?
Okay, well, the 2021 tax law revisions were made public today, and I think there's going to be a lot of talk about that, even though most of it is very technical in detail. As you mentioned, the second quarter GDP advanced figures are coming out this week. Consumer Sentiment Index, Business Sentiment Index are coming out this week as well for Korea, and economic activities for June, consumption, investment, and production is also coming out for Korea. We started distancing in the last week of June, so we may be able to see at least the beginnings of what the distancing is going to have, effect it's going to have on the Korean economy. In the U.S., in addition to the FOMC meeting, well, just before the FOMC meeting, we should see personal consumption expenditure price indices, which is the most important indicator for the FOMC. So everybody's looking out for that numbers. U.S. is going to give out second quarter GDP advanced number as well, and the U.S. consumer confidence numbers will be out this week as well. So we'll be looking out for that to see whether the economy is looking up or looking down.
All right, Professor, we'll have to leave it there for today and regroup later in the week. Thanks so much for sharing your insights with us today. We appreciate it.
Thank you.